All right, you guys, let's get into this video. This video is going to be about first presented fair value gaps, also known as the silver bullet. It is just pretty much a very significant fair value gap for you guys to use. If you're not using this already, I almost guarantee you, if you start using this strategy, it's going to help your trading tremendously, right? So I already divided my days for you guys to make this video a little bit quicker. If I go to the 1 minute chart, I'll show you what I'm talking about right here. I divided out my days for last week price action right here. These are these vertical lines. So this is Monday, this is Tuesday, Wednesday, Thursday, Friday, right? So we're going to go through last week's price action and give you guys some examples of how to use the first presented fair value gap. Now, when you're using the first presented fair value gap, you have to be in the 1 minute time frame, right? This fair value gap is going to show up on the 1 minute chart. All right. So right here, we're in Monday's price action. All right. Boom, right here. So this is Monday. And then so you see this right here. This is the 9:30 candle. This gap does not count. When you're using the first presented fair value gap, the 9:30 candle never counts. It's always the gap after 9:30, right? So 9:31 and after is when you're going to start looking for your first presented fair value gap. Okay, so right here, we have this gap right here will be my first presented fair value gap. Let's mark that out. Take that off, make sure, okay, that wick wasn't right there. So this will be my first presented fair value gap. And then another tip I want to give to y'all as well. When you see this little gap right here, whenever you're putting any type of fair value gap on your chart, make sure to include that gap. So your fair value gap box will have to be like this, right? You're going to include the body of this candle, right? Include that entire gap. So let's see what happens in the market, right? The market made the first presented fair value gap, went all the way up in there. Okay. Probably was sweeping some type of liquidity or hit some type of order block in there. But notice how when the market comes back down into this fair value gap, right, it consolidates for a little while, and then eventually it uses this as resistance to take the market down, right? All of this is all off the first presented fair value gap, right? And also, here's another tip for you guys. Extend your first presented fair value gaps furthest to the right. So you see how my first presented fair value gap goes all the way to the right of my chart? Well, when you guys do this, what you're going to notice is price continues to respect this first presented fair value gap. Typically, from my back testing, it's going to pretty much respect that for at least about a week, right? Notice how this is Monday, so still respected it right there. Look at this right here. This is Tuesday's price action, still bouncing off of that first presented, right? And we can keep going on and see how the market respected this one first presented fair value gap throughout the week, right? Let's see if it bounces anywhere else. Nope, not there, right? So I just wanted to give you all that tip right there. When you're using the first presented fair value gap, leave them on your chart for at least a week so you can back test them and see, you know, how is it working, right? So let's go back to the first presented. Where were we? All right, we was up here. Boom. So if we zooming out, notice how market goes up, right? We got some liquidity down here that we can sweep right there. Let's mark that out. That could be a target. Boom. Right, we got more liquidity that could be a target right here. If you want to be conservative, you could just even target this little low. But essentially, all you're going to be doing is looking for swing lows on either the 1 minute time frame or the 15 minute, the hourly, and you're going to be seeing what happens. So for this Monday, you notice how price went up, swept liquidity. Once it started to come back down, we don't have any more reasons to go back up, right? Liquidity was swept. Something already happened up there. From there, all you're going to do is figure out where can I get in, where can I get out, right? There's a few levels to look forward to right here. Look at this level right here. Boom. We didn't quite hit that one. Well, it just bumped it. And then you also have this level down here, right? All right, so let me see. And the reason why I'm marking these out is because I want to just show you guys how much this works, right? Now, obviously, you're not going to get it right every time. First presented fair value gap have helped me tremendously, but I still get it wrong from time to time. So how I will use this when the market came down in here, it was, consolidating, and then it broke below, right? Because if I'm going to use my first presented fair value gap, I want to see it break below. So if I'm anticipating for this market to go down here and sweep this liquidity, I want to wait for that to break below before I get in. And then this previous swing high on the 1 minute is going to be my stop loss, right? So my stop would be like right here. Boom, just like that. If you go for the first swing low, that's a 2-to-1 already. If you go for this swing low, that's almost a 3-to-1. If you go for this swing low, that's almost a 4-to-1. If you go, you know what I'm saying? So you guys get the message, right? These trades can make you really profitable and definitely help you complete your funded challenge, right? Let's move on. I'm going to give you guys another example. This one is from the evening session, first presented fair value gap. This one happens at 1:30, right? 1:30 is when I began to look for a trade for the evening session. Okay, so let me find the first presented fair value gap in here at 1:30. I don't know why it's not showing. Are we in electronic trading hours or what? All right, we're in electronic. 1:30 should be 13:30. I'm not seeing that right now. Look how it's just going from 12. Okay, maybe let me come back. All right, maybe I'm in the wrong thing. I don't know why it's just going from 12 to 18 like that. I don't know. Let's go to the next day. I don't know what's going on with that, but let's just go to the next day. Wait, what happened to all of my vertical lines? I don't know what's going on with that. Just bear with me. I'm trying to give you guys some really good examples in here. Let me go to the 30-minute time frame so I can separate these days, make it a little bit easier. All right. Oh, well, they was already separated. I guess I was just in the wrong area. Okay, so let me give you guys another example. Okay, I'm looking for this blue line. Where's this blue line at? Okay, so right in here, I should have been able to find one from 1:30. Strange. All right, so we're going to just go to Tuesday, right? Let's go to Tuesday, see if we can find another example of the first presented fair value gap. All right. So now we're on the 9:30 candle right here, on the 1 minute time frame. This candle right here creates the first presented fair value gap. Let's box this up. All right, let's box this up. So here's another tip, and the people who watch this video fully, I'm telling y'all gonna get some gems from this video. This is gonna be a really good video. All right, I'm in Georgia. I had to turn my AC on. I'm in Georgia, and I'm in my semi truck, and it is hot in Georgia, y'all. And y'all know I'm from Michigan, so I'm not used to being this hot. But look, first presented fair value gap. Now look, I'm gonna give y'all a tip. Notice how on the 1 minute time frame we make the first presented. Market goes down, comes up, breaks out above, right? This candle right here closes above. Notice how it hits the top of this candle right here, right? Notice how right here, this candle breaks above, and then this candle right here hits the top of this fair value gap and then takes off, right? So I'm giving y'all a tip on how to get into the market when this happens, because this is a very strong indicator. Typically, when the market only hits the top of the first presented fair value gap and takes off like this, it means that the market really wants to go up, right? And as you guys can see, that's exactly what happened, right? The market just kept going up, kept going up, kept going up, never gave you a chance to enter. So how do you enter markets like this? Personally, I don't like to trade it when it's like this, because it makes it really hard for me to get an entry that I trust. So one thing you can do is this. You can just use this low right here, and let's say you get a late entry, right? And this is why I do believe that price is algorithmic. Let's say price breaks above, hits that fair value gap. Let's say you get a late entry all the way up here, right? You can still use this low right here, because now you know that price is going to be moving very strong in one direction. So now you can target these equal highs right here. Even if you get a late entry, the most important thing is having your stop loss in the right place. That's a good one-on-one risk to reward ratio right there. If we zoom out, and we could probably find maybe some other highs to go for. Look at this right here. Look at this high up here. Boom, right there. It took 20 years for it to get there. It didn't get there until the next day, but that could have been another high that you could have went for. So let's say if you was going for that high, then you would have had your take profit all the way up here. Even though it would have took 20 years for it to get there, that's still a 4-to-1 risk to reward ratio. Now you don't have to always wait for the target to get hit. Me, if I'm risking on this trade, let's say I get a late entry on this trade, I'm risking about, I don't know how much that is, let's just say 100 points. If I'm up 200 or 300 points on this trade, I'm locking it in, right? You don't have to always wait for target. So that's another example of how to use the first presented fair value gap. Remember, y'all, it's the fair value gap that appears after 930. It's never the 930 fair value gap. So 931 above, that's when you're going to start looking for the first presented fair value gap. Then we do the same thing over here for the evening session, right? Let me show y'all. 130, at 130, that's when the evening session starts for me. This is all ICT concept. This is all ICT knowledge, right? So you find your 130 candle right here. Boom. Notice there's a little gap right there at 130. We're not going to use that gap. The gap we're going to use is the one that happened after 930, right? It's a little gap right here. So notice how price breaks above this gap, gives it a little touch right here, shoots off, right? Comes back again, sweep out this liquidity, have another bounce, and then we started to see it break below. Now notice how when it broke below, same scenario, y'all. This is why I said always, if you're looking for it to reverse or go in a different direction, always wait for the break below, right? Notice how when this 1 minute candle broke below right here, notice how right here, all of these bodies on these candles, let me zoom in, I want y'all to see this. So notice how all of these bodies right here was respecting the midpoint of this first presented. Then we broke below again, right? It already happened once, so it's showing you that a reversal might be underway. But then it happened again. This candle break below. This is when you get into the trade. Same scenario. You put your stop loss when you get into the trade right here. You put your stop loss right up there. Okay, and then you find swing lows to target. Now, obviously, the market is bullish, So I wouldn't really want to try to target too many swing lows, but look at these swing lows we have. We got one right here. All right. We got one right there. Then we have another one down here. And I'm telling y'all, just with this one strategy, you're going to start unlocking your prop firm accounts. I'm telling you right now, just with just one strategy, you're going to start unlocking these prop firm accounts, right? Because I mean, just look at the risk to reward, right? Put your swing, you put your stop loss above the most previous swing high on a 1 minute. Then you look for the swing lows to target. That's a 1-to-1. You target this swing low. That's a 2-to-1. You target this swing low. That's a 3-to-1, right? And you don't always have to have a 3-to-1. A lot of the times I go for 3-to-1s, but once I get to like a 2-to-1, I'm taking my trade, or I'm taking the profits is what I mean. Or like, let's say if I'm going for a 3-to-1, as soon as it gives me a 1-to-1, I'm moving my stop until break even. Then when it gives me a 2-to-1, I move my stop over here down to the 1-to-1, right? This is how you use the first presented fair value gap. Let me give you guys another example. And the reason why I wanted to back test all of last week's examples is so I can give you guys multiple examples and you guys can see for yourself how many times this stuff works. Like I said, you're not going to be 100% all the time with using the first presented fair value gap. You might get faked out a couple times, especially on NFP week, but this is going to help your trading tremendously. All right, so let's go into the next day. Now we're in the next day, same scenario, right? The orange line, the orange vertical line is where the 9:30 open is at. So you guys can see now at the 9:30 open, what did we have? We had that sweep of liquidity that I was showing y'all previously in the video. Market came up, swept that liquidity. I'm going to take this off of my chart, right? The first presented fair value gap was right here, 939 candle. So we're going to box that up. Boom. Right? The market drops without hitting the first presented fair value gap. So what do you do when the market drops and it didn't hit that first presented fair value gap? Great question, right? Normally when that happens, what the market tends to do is it's going to come back up either later on in that day or later on in that week, and it's going to come back and touch that first presented fair value gap, right? This is a very strong pattern. Notice how the market swept liquidity, made a fair value gap, left this fair value gap open. That's a very strong pattern. So what does that mean? You should be looking for sales. You should clearly be looking for sales in all of this, right? So let's see. I remember this day actually. This was a choppy day, and I remember because I took my sale off of this order block right here, these two green candles. I took my sale off of this, and then I just made like a couple $100 that day. It was nothing really too crazy. This was a very choppy day. I didn't really care to trade on this day. All right, but we're going to leave this on our chart for learning purposes. Now let's go to the evening session fair value gap at 1:30. Let's see what we got. And you guys can see that this day wasn't as clean because look how small these candles are. These first presented fair value gaps aren't even really that significant. But let's find the evening session first presented fair value gap. We got one right here. That's the first presented. You got to follow the rules, right? Remember what I told you earlier in the video. If you see a gap right there like that, make sure you include that gap right there when you're adding the first presented fair value gap. Okay, so what happened? Well, the market breaks above, come back down. It's a bit choppy. Like I said, days like this, not the best day to trade. But eventually it broke above right here. Didn't give you a chance to enter because it's a choppy day. Right? These are all things that you can eventually learn how to pay attention to when you're reading price action, and it's going to help you stay away from trades, because even when it did finally come back down and hit this first presented, Look how choppy this little small move up was. That's not really enough to make me want to get in any trade, right? But it's important for me to show y'all this as well, because these are the days where it's not going to work as well. Even though you may take a loss on these days, it can still help you take a smaller loss, right? If you learn how to read price action the right way, even when you lose, you're going to start losing better than you was normally losing before. Before, you probably was losing like crazy, big losses. Using these ICT concepts, you're going to start even losing better, right? So I'm just going to fast forward past this date, but notice what happened, right? Price eventually did want to go back into that first presented fair value gap. Later on, I think that was in the Asian session, right? It eventually did get back into that first presented fair value gap. We're going to move on because I want to give y'all some clean examples, right? Look at how it's respecting that yesterday's first presented fair value gap right here, but I'm going to remove this off of the chart because now we are in Thursday's price action. Now we are in Thursday's price action. So look at this. We got our 9:30 candle where this pink vertical line is. Now everything after that, we're going to look for the first presented. Make sure to include this gap right here. Boom, just like that. That's our first presented. Now notice how we get the first presented and then the market touched the lower quadrant. So remember, I just told you guys, this is a very important note. If you're a beginner ICT student, this is something you want to have down on either your memory banks or your notebook, right? When price don't even get to the midpoint of these gaps, it's a very strong signature, right? When price hits this lower quadrant and starts to sell off aggressively, never coming back to touch that, that's a very strong signature, meaning that the algorithm is going to start to fly in one direction, right? So how do you get in this chart? Let's say I remember this day. I missed this entry. Price went down there, took off without me. How do you get into this market? Well, what you do is you got to find another way to get in, right? Because obviously if we believe in what we believe in, then what are we thinking? If we believe that the algorithm is going to keep price down and that we're going to start flying to the downside, we know that price shouldn't be coming up here. So you could even use this as a stop loss. But what I would do to get into a market like this, I will mark out on a 1 minute, swing high, swing low. I will find my premium zone, right? This is my premium zone. I got videos about premium and discount. ICT has videos about premium and discount. So right here, boom. Notice how we didn't get that order block hit right there. We didn't get that order block hit, but we did get this fair value gap hit over here. Right? So your stop loss will have to be like this. Let me show you. Your stop loss will have to be obviously above this swing high right here on this candle. So you get in at the bottom, don't get the most perfect entry. Stop loss up there. Then you're going to zoom out, find some equal lows somewhere, and then you're going to find the target. Or you could just do the automatic. You know, some people like to just do automatic 3-to-1, right? So let's just say you do automatic 3-to-1 risk to reward. I don't do that. I like to look for lows or something to be swept. Boom, you eventually get your target hit over here. All right, and right here, what did we do? We didn't even take our entry from the first presented, but the first presented gave us important information to say, hey, we only hit the lower quadrant of the first presented right here, and then we started to sell off very fast. What is that telling us? Hey, the market is really trying to go somewhere, and it really want to do it fast, right? Look at what happened after we hit this first presented, 21,615. It goes all the way down to 21,379. That's almost 300 points, right? That's like 200 plus points within about 50 minutes, right? So that's a really good move to the downside, right? Very important to notice that. Let's move this off the chart. Just wanted to give y'all a little example of how to get in when the price only barely touched the first presented fair value gap, right? Now let's find that 130 first presented fair value gap. 130 is right over here. Then right here we have first presented fair value gap right here, right? Let me make sure this is, nope, take it back. It's actually right here. This is our first presented fair value gap. Okay, so same scenario. Price breaks above, sweep this liquidity up right here. Right, we know that on the day we're downtrending, we want to at least try to follow the trend. Price comes back below on this candle right here, breaks below, then that's when we start looking for our entry. All right, remember, you're going to use, for your stop loss, you're going to always use the most previous swing high or swing low. So you're going to use that swing high, that's your entry, and then let's say you just go for a 3-to-1. Let's just see if it works again. Right there, boom, 3-to-1, target would have been hit. Got a little bit choppy, got a little bit scary, but 3-to-1 was also hit in this example as well, right? So I'm gonna end it there, you guys. That is how you use the first presented fair value gap. What are the key takeaways from this video, right? Here's the key takeaways. You're looking for the first presented from 930 and onwards, and 130 and onwards, right? The first presented fair value gap is never exactly at 930. It's never exactly at 130. It's after 930. It's after 130, right? Always pay attention to the midpoint of the quadrants, right? Always pay attention to, that's why I have a little dotted line in all of my boxes, because you want to know how far did it go. All of that information is important, right? I'll make a video on that later on. And then the last thing that's very important as well is make sure you extend your fair value gaps all the way to the right, because you want to see how the market respects these levels 5 days from now, right? 4 days from now. Trust me, it works, but you have to go back test it for yourself. So that's going to be the end of this video, y'all. Thanks for watching. I appreciate y'all. Make sure y'all drop a like on this channel. If y'all want to trade with me, don't forget that I have a Telegram group. The link is going to be down in the description below. Subscribe to the channel. Leave a comment if y'all have any questions. If y'all want me to make any videos about anything, let me know, man. I'm here to start pumping out content and trying to get everybody to a new level. Let's get it, man. Appreciate y'all.